Welcome, this is Javier Chico. This is my second video in English, and this time I'll be speaking about Minera Alamos. I don't have much time to do a in-depth analysis, so I will be doing a quick video. This will be very short. Sorry, I don't have time to analyze it properly, but I promise that in the future I will release a longer video making a more in-depth analysis of this great company, because I think that this is a great opportunity to invest now in this company. So I prefer to do a quick video, show you the potential that this company has, why I think that this is dirty cheap, and we will do a more detailed analysis in the future. I will start with the price action of this company. As you can see here, this is a normal graphic that every company had in the mining space. Every company has duplicated its value throughout the year because the gold price has increased a lot during 25. But you can see here that in earlier August, they had a big drop in the price. Why? I will show you later. But you can see that this big drop was followed by big volume. So we saw a big capitulation. This is the reason why they had such a drop in the price during August. They did an acquisition and a concurrent private placement financing. They acquired assets from Equinox Gold. They acquired the Pangold mine, producing mine, Gold Rock project, Ilipa project, that were all located in Nevada, in the States. They paid 90 million in cash to Equinox, or better said, they will pay when the transaction closes, and they will give 25 million in common shares of Minera Alamos to Equinox. So in total, $115 million American dollar. Concurrently, as I said before, they did a private placement of 110 million of Canadian dollar that in fact it was increased to 135 million of Canadian dollar at a price of 0.355 cents of Canadian dollar. So you can see here why such a big drop of price. First, they were in the range of 0.48 Canadian dollar, and then they do this financing at this price, so automatically the price goes to that price that they are doing a private placement. And of course, they are doing a strategy change. They are changing the strategy, so many people many people felt disappointed with this change on the strategy of the company, and we will analyze in the following slides. This was Minera Alamos before Equinox transaction. You can see here that they were focused in Mexico. They had two projects of development in Mexico, Cerro del Oro and La Fortuna. They were producing in Santana mine, and they had a largely permitted Copperstone project that of course they were searching for funding. I will say that this company they had nice assets, but they didn't have the cash to deploy or to develop, better said, those assets. Santana mine was producing, but they didn't produce many free cash flow or enough free cash flow to finance the development of their portfolio. So they were rich on assets, but they didn't have the cash or the free cash flow to develop such assets. And as you can see here in the capital structure, they have 576 million shares outstanding, no warrants, few options, and they were issuing to buy the assets from Equinox 380 million subscription receipts. So in fact, it's like adding, I don't know, 60% more than 60%, 70% more of shares. So it's difficult to digest such an amount of new shares. So this is the reason why they have the price so depressed at this moment. And that depression on the price, that fall on the price, is our opportunity with the new company, because this is like a new company. In the new company, at the moment, there is a big opportunity. You can see in this slide why I say that this is a very good opportunity. Okay, because this company, pro forma, after the transaction with Equinox, they will have a market capitalization of around 400 million Canadian dollar. So with that price, you will see here what you are getting. First, Panmine operating. Okay, they are producing 35,000 gold ounces per year, and you can see here my calculations of free cash flow, more or less, okay, that they will generate. This is a kind of quick calculation. Okay, more or less it will be between 50 and 40 million per year, depending on the gold of price, the price of gold. Okay, I did the calculations with two scenarios. One with gold at $3,200 per ounce and $3,600 per ounce. Okay, this free cash flow is more than enough to finance the next mine in their portfolio. It's Copperstone. They have the PEA. They expect to produce in the by the end of 26, and the initial capex is very low, 36 million. This mine has a net present value of $227 million. Okay, but after that, look at the rest of their portfolio. They have also a very low capital intensity here in this mine in Cerro de Oro. They already have the PEA, and they are waiting for the permits. Okay, they expect to start producing in 28, and Gold Rock, they expect to start producing in 28, 29. So you are paying this for a company that will produce 190,000 ounces per year by year 29. So the value you get for the price that you are paying is very high, very, very high. I think that the best setup in the whole gold mining space. And now the question, what needs to happen to success with this investment? So I think that three things. First, they had to close the Equinox transaction. Don't take it for granted. So the first thing that we need is to close the Equinox transaction. Second one, we need to see the quarterly reports and see the free cash flow that they are able to generate, because that will be what will move the price. Why? Because the market will see that they have enough free cash flow to develop their portfolio, and the value that they have in the portfolio is very high. If they can unlock the net present value of the other projects with the free cash flow that they have in the pan mine, this will explode. Okay, this mine will increase a lot in price, considering that the price of gold is the same as today or remains at a healthy level of 3,000. And of course, we need to see that they do progress in the development of their portfolio. I'm not only talking about the capex. Okay, it's not only about having the cash, but they must have the teams, the equipment, the people, the procurement. Okay, they have to move in the right direction so the market can see that this company will succeed in the new strategy. Okay, the market will look very closely what this company does in the following quarters. So I hope you like this video, and as always, this is not any recommendation. I'm not financial advisor, and take this as an educational video. Thank you very much.